Joining us right now is InvestDiva.com CEO, Kiana Danial. Great to see you, Kiana. Thank you so much for being here.
Investing superstar, best-selling crypto author, CEO of InvestDiva, Kiana Danial has joined us now. And Kiana, you were actually featured on a Business Insider piece recently where it says you shared your 3 habits that allowed you to build a $2 million portfolio.
Kiana Daniel's with us, best-selling author and CEO of InvestDiva.
CEO of InvestDiva.com, Kiana Danial.
The CEO of InvestDiva, Kiana Danial.
Kiana, great to have you. Thank you so much for joining.
She is an award-winning, internationally recognized investing expert. She's been featured on Business Insider and Forbes and CNN, Fox Business, and a host of other business and financial media outlets. Are you ready? One more time. Are you ready? Well, if you are, you know how we do it. Get up out of your seat, put your hands together, and welcome to the stage, Kiana Danial.
Hello, my dear friend, Kiana. I'm so excited to have you here, especially, and thank you so much for making the time and do this recording for all our audience. I know this is going to be an amazing session, packed of a lot of information. Welcome to the AI Challenge.
Let's go. Thank you for having me. This sounds so fun.
Of course, let's start. Okay. First of all, Kiana, I know that your story is amazing. Okay, so you went from Iran to Japan to Wall Street to getting fired to building an $18 million portfolio. Okay, so
yeah.
Tell me, okay,
it's rising.
What do you think it was that turning point that from going from one place to the other makes you actually change your relationship with money?
Oh, for me, so it's interesting because I always knew that I wanted to become wealthy, but I also had this love-hate relationship because growing up, I always was told, oh, money isn't everything. Don't become a salesperson. Go become an engineer. Go become a scientist. Never talk about money. Like I had such conflict in my mindset about money. And then in Japan too, so that was Iranian, my Persian background, Persian Jewish background. And then in Japan, it was also super taboo to talk about money. So that, again, we didn't talk about money, but I was getting more and more interested. And then 2008 market crash happened. I made a little bit of money in a trade. I'm like, oh my gosh, this is so cool. But again, in Japan, you can't talk about it. And then I finally came to America, and that actually really gave me the freedom. It was the first place in New York that they were so open about talking about money. But there were still people here like anti-capitalist, anti all of the things. So it has been an evolution, really. Every year, I become more and more happy with having more and more money. And it's been like layers peeling off and like identifying the kind of mindset shifts and the blockages and the objections, and then tackling them, identifying, and I'm sure there's even more, because otherwise I would have been a millionaire, like billionaire. I am a millionaire. I would have been a billionaire if I'm sure there are still some layers of mental block. Yeah.
I'm sure that you're close to that. So tell me, if you have to start over with $500, okay, what would you do different? If there is something that you would do different.
So the thing is, everything that I did got me to this place. And the question, I think, how you can ask it differently, am I starting with $500 as the person that I was a decade ago? Or I lose everything today with my money mindset, with my skills, and starting again with $500? Two different scenarios. When I was in my 20s with $500, had just gotten fired, didn't have money to pay rent. I didn't have the mentality, I didn't have the skills. And I didn't have like the portfolio or the knowledge on how to invest. Now, if I lose everything, it's probably going to cost me. It's going to take me less time, but I think it's going to be the same. I'm going to learn the skills. So it would be a reason that I would have lost everything. Or I'm like, okay, what is it? I'm going to go. So it goes back to my whole methodology of triple compounding, which is first you invest in yourself, in your mindset, take out the blockages, then you invest in your income generating extensions, things you have control over, your business, your job, not other people's businesses yet. So first you want to invest in the things that you can control. And if you're a control freak, great, right? Like control that income. And then you go and invest in external assets, other people's money, stocks, crypto, other real estate ventures that you're not involved in. So that is triple compounding, and that's exactly what I would do today.
I'm so excited about to talk about triple compounding because I've been following you for a while, and I think that what you teach is amazing. And never hear everything that you talk about and on the diamond system. So we're gonna go to that, but I do have a question because I think I hear you all the time saying that actually investing is feminine. Feminine, how do you work? Investing is not a male word.
Oh, it's feminine.
Feminine is feminine. Thank you for that. Okay. Why do you
Yeah.
say that?
Invest. So, okay. I think so. When I said investing is or finance is feminine, that was 3 years ago, and you heard that then. I have evolved since then. So let me give you the bring. Let me bring you up to date to my
Is
newest,
feminine or no?
most recent revelation. So we went from finance is feminine because finance has cycles and women have cycles, but now we found out that men have cycles. So hear me out.
That is so interesting,
It is true.
Kiana.
Yes. But hear me out. I'm becoming more and more and more of like these finance boo-boo, all the things. So this is what I love triple compounding. I'm going to bring it back to you. So triple compounding, we talked about the 3 investments, but then at every investment level, you also have to take 3 actions: generate, automate, accelerate. All right. Now, first think about the investments. When you invest in you, you have to trust. You have to trust in you. That is a very feminine thing to do. Going into your mindset, learning about personal development, that is a very, very feminine thing to do. The second investment was in something that you control. Control is a very masculine energy. And then the third investment, other people's businesses, stocks, crypto, it is actually that divine union of feminine and masculine because the masculine is making that business grow, and then your feminine trust is needed to trust in that and actually let it go. So triple compounding is
That's
actually the
amazing.
divine union.
I never thought about that, but of course, Kiana and I has been in some other masterminds together, and we learn a lot about energy and how female energy and male energy goes together, and how to use both in yourself because it's important that like we have a lot of male energy, and it's important that men has some female energy too, right? So, but that is like impressive, like that is amazing. That related with your triple compounding, okay, and how so is how the last one, which is investing in others' business or others people's business,
Yeah.
is the match.
It's the divine, it's the unification of feminine and masculine. And then the actions too at each level. Generate is the masculine action. Masculine energy goes and gets it. The second action is automate. Again, that is the feminine trust. You go automate it, you receive it, you're let go, you let it go, and you sit down and you're cool with it. And the third action is accelerate. That, again, in my opinion, is kind of the unification of the feminine and masculine. So no matter how you cut it, triple compounding is how you achieve fulfillment in everything in life.
That's amazing. Now tell me, how does that relate to the Invest Diva diamond analysis? Can you break it down in a simple way that the audience can understand? And I know that it's probably a full 45 minutes class, which I believe everybody in this audience should be going and listening to you to teach this in a deep level, because even for me, it was like, wow. But in a few minutes, what is the diamond system?
Yeah, so the diamond system, as you can see behind me, that's the award you get after you make your first million in your portfolio. That was the first thing I ever came up with. That has to do with the third investment, that is investing in stocks and crypto. And so most people, when they want to get started in investing, some people like hear something from a financial advisor, okay, let me put it in a mutual fund for you. Some people hear it from somebody on social media, oh my gosh, like buy this index fund or this meme stock or whatever. And the truth is, investing is not a one size fits all. And investing is extremely, incredibly personal, as is fine, like personal finance is personal. And I developed the 5 steps really essentially for myself because I found myself getting very emotional every time the markets went up, went down. I'm like, oh my gosh, is this strategy for me? Is that strategy? And at the time when I was on Wall Street, I would like go and copy literal Wall Street bros and they would make money and I would lose. I'm like, what? I was just following whatever you did and I lost money. What happened? And I found out it's because of the differences in my risk tolerance, in my portfolio situation, the allocations. So I developed this to kind of create a structure that I can go step by step and create a strategy that is unique for me. And then as I started like managing money for my dad, he's like 80 years old. So okay, let me see. So his portfolio is going to look differently than mine. Like I'm like in my 40s and 80s, like different scenario. And then as I took over my daughter's portfolio when she was born, of course, she is in a different scenario, different timeline, different risk tolerance. So the 5 steps are the structure, and I'm going to teach you what it is. So the first one, we call it capital. Capital analysis is understanding where you stand. Like, where are you at? What is your age? What is your risk tolerance? And risk tolerance is not just about how much risk you like to take. It also, do you have the ability to take it? And a lot of people are like, they don't understand that risk tolerance has to do with both your ability, which is your financial situation, and your willingness to take a risk. And it's like a marriage between the two. So I developed the tools to really measure that. And that is the first step. And that is what I'm going to give to your audience for free, the toolkit, the risk management toolkit. And we actually built the newer version of that with AI. It's so cool.
That's
An AI theme.
well, AI. A few minutes. Just hold it there. We're gonna talk about AI.
Yeah. No, because before it was like spreadsheets and I had to like get the pie chart and it was so horrible. And now I just created an AI tool that you just put in a couple of things and bada bing, bada boom, you know your personality, you know everything, and it gives you a portfolio allocation. It's beautiful. It takes like literally 5 seconds. So AI is great.
That's amazing. That's amazing. And I know you spoiler alert. You spoiler alert everybody, because at the end we're gonna tell him about the free gift that you have. But everybody, just Kiana just said that she has an amazing free gift for you. That's fine, because like everything that Kiana does has so much value. So I have to have a conversation with Kiana, and I was like, Kiana, please, could you please give our audience something for free that they can start learning a little bit about what you do? Because I do believe, Kiana, even though this audience is 100% real estate, I do believe in diversification. Okay, and I talk about this. We also hold stocks. Okay, we have a little bit of crypto. My kids has real estate, but they also have investments on stocks. So I do believe that you need to have a diversified portfolio. So that's why I'm having you here, and we're going to talk about AI. So your diamond system, let me see if I understand correctly for the audience here. Your diamond system is the way that everybody is going to understand exactly how or what do they need and how to create a step-by-step on how to invest their money.
Yes, invest in online assets specifically. And I totally agree with you about diversification because, I mean, look at the conditions of the world. Like if something happens, like for me, for example, crypto is my insurance for if like World War III just like comes, like you gotta flee. Like, what are you gonna do with your real estate? Like, I always think of it that way as an immigrant, because when we came to America, like we had to leave everything, like our house, everything is there. And we're like, oh my gosh, we came here with like nothing. So diversification to me is the most important aspect. And that is what the diamond is going to show you. Like you're going to be, the first part is like capital. So you're going to find out and it's going to give you, okay, you have this much real estate. How much of your total net worth, based on your risk tolerance, based on your age, you also need to put in bonds. Maybe you have to have some CDs. Maybe you have to have high yield savings accounts, stocks, crypto, options. Maybe you're more you want to become, you have high risk tolerance and you have a lot of time in your hand. Maybe you want to do some options trading, some swing, some higher risk, higher reward assets. So that the first part alone, the thing that I Sorry, but I built it for you guys, and people pay like $2,000 for this to us. But I created it so that it gives you the portfolio diversification that you're gonna need to make even more money, you know,
That's
and
amazing.
insure it. And
I'm
that was
so
just phase
excited to
one.
try. So excited to try your AI tool too. So one more question about stocks, and we're gonna go to AI and stocks too. But how would you decide on, for you in your portfolio, whatever stock is a long-term winner versus just something that is trendy and it's gonna burn your money?
Yeah. So actually, let's get to the next phases of the diamond because the diamond brings it all together. So the first phase was capital. The second phase is intentional, meaning where you want to go. So what is your intention? Like if you were going to marry a stock or marry somebody, what are your intentions? Are you just here to like take advantage of me? Is it a date? Is it a one night stand? So like all of that, that goes into, we call it the investment policy statement that you're going to create for yourself. And based on that, then you get to decide how you want to find an asset. If you're going to be a long-term investor, which was your question, then how do you find it? And then how do you analyze it? That comes with the other 3 points of the diamond. You see 1, 2, 3, 4, 5. So the third point then comes to asset picking based on the first 2 phases that we just talked about, your capital and your intentional. Then you pick an asset that matches your situation and your needs, and then you do fundamental analysis, market sentiment analysis, which is super important, and then technical analysis, which kind of, if you don't want to overprice for a stock, you do technical analysis so you don't buy high and like sell low. You want to do the opposite. You want to buy low and sell high. That is technical analysis, and all 5 together. That is how I grew my portfolio, and I do it in only 1 hour every 3 months now for my overall $18 million portfolio because I just set it on auto and everything. Like I trust, because I have so much trust that this is exactly right for me, then I don't have to check it every single day. So to answer your question, if I want to know a stock is for long term, and that is the way that I want to invest, you might not want to invest long term, but if that is how you want to invest, which is how I invest now, then I look at future fundamentals, not current. Because everything that you hear about on like CNBC and like whatever they're talking about, oh, earnings results or blah, 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 that doesn't matter. That's like, it happened already. This is not gonna, like today's earnings result is not gonna tell me what's gonna happen in 10 years. So when I'm looking at stocks, I actually put my entrepreneur hat on. I look at the category. Is this category here to stay? I typically start with companies that I already am a consumer of. Am I gonna continue being their customer? Like one of my biggest holdings is Meta. Yesterday on Fox Business, I was talking about it, and Charles Payne was asking, "Hey, what about Meta?" I'm like, I spend $1 million per year in Meta. Like, of course I'm gonna have Meta stock. Like, out of all of the social media platforms, this is where it gives me the best ROI. So I'm going to invest in this company because it has proven to me. So that is, and AI is not going anywhere. Social media is not going anywhere. People are going to continue shopping. And so I look at the future. Is this category going to be viable? Is this company a company that is going to continue to stay? People are going to continue to love it, to use it. And if the answer to that is yes, then I'm going to do the other 2 analysis. Is everybody panicking? If yes, let's go buy.
Let's talk about that, because
Yeah.
Warren Buffett always say what is be fearful when everybody's greedy, and be greedy when everybody is fearful. And there is so much fear right now, Kiana. There is the war with Iran, what happened with Venezuela. You and I are very close to that. There is a lot of fear on investing, and that reminds me what Warren Buffett always said, and you just say that, okay, if everybody is fearful, yeah, okay, let's go. So tell me, how do you see this environment, and are you taking advantage of what is happening right now?
Yes. So the opposite of what Warren Buffett says, by the way, because every time you say this, some finance bro is going to slap you, but well, but you're catching the falling knife. And I'm like, okay, bro, here's how here's how you overcome that with technical analysis. All right. So right now, everybody's fearful. Totally got it. No, markets. Markets have cycles. Markets have cycles. And the whole market is just emotional. It's like literally an emotional footprint of finance bros and the markets in general. And just like how we as humans have patterns, markets that are a reflection of our psychology have patterns. So when I say technical analysis, that really is psychological analysis of the markets. And every stock has its own psychology. And the reason why it works is because everybody's looking at the same thing. So typically what happens as the stock starts to drop, they hit something they call support levels in prices. So let's say you want to buy, I don't know,
Meta.
Chanel bag. No, I'm going to put it in a Chanel bag scenario so it's easier to, I don't know. So the people don't do that, but like, let's say you want to go on auction, right? And you kind of start seeing the patterns like, okay, most people like it's a winner at like 20K. Most people like you start seeing the prices that like you start seeing patterns. I'm sure it's the same with real estate too. Like there are patterns like, okay, if we're negotiating, if the owner goes this high and they'll come here, you typically get in the middle. Like those kind of patterns also exist in the stock market and you can literally see it on the chart. So what I do is I look at them like, if it's dropping, I look at the past, like the last 10 times Meta dropped, it dropped 45%. It might, I'm just paraphrasing, it might not have, but let's say it's 45%. Then history doesn't repeat, but it does rhyme. So it is likely that this time around too, Meta drops that much. That is going to be the bottom. But however, I know that I might not exactly capture that bottom based on past behavior. So what do? I set a couple of buying orders and I automate them based on the psychological levels. So I have like 3 typically that are low enough that they could reach, and I have like 1 really, really low. And I set them and I forget them. So my first Meta buy order just went through. So I'm happy. If it doesn't drop anymore, I didn't miss out. If it drops more, also great. I'm going to buy even more. So it's like a win-win situation and it doesn't get me emotional and it just keeps me in the positive state, which is very important when you invest.
Mm-hmm.
And more often than not, typically at least 2 of my buy limit orders go through. And that is how I'm always happy when the markets crash because I'm like,
let me ask you something. Where do you see the most people make the biggest mistake on stock when the stocks start going down? What do you see that are the
panicking? I mean, it's one thing to say what Warren Buffett says, and it's another thing to look at your portfolio like crashing and being completely in red. Like the emotions of it is real. And you can say I have high risk tolerance, but then you open your app and you see the headline and you just cannot help. And different people have different tolerance. For example, my sister, she just can't bear it. She just literally freaks out. So I have to beg her to just close her app. Some other people, I have trained myself, but even I sometimes, sometimes like last year, this happened, by the way. Last year, this exact thing happened exactly in March and April. And my portfolio got cut in half in a span of 2 weeks. And I'm like, okay, what if I'm wrong? Like you start questioning yourself. And that is why I automate. Because if it was up to me to push that buy button at this real bottom, it is scary.
Oh, okay, I got it. So you automate that in a way that if it goes like I'm just creating a number. If it goes 20% down, you buy a percentage. But if it goes 25% down, you buy a different one. If it goes 30% down, okay, you buy a different amount, okay? And it's automatic. So you have cash sitting aside that then
Oh, no, actually, I don't because I don't want my money to just be sitting there. You nailed it on the first part. Now, how I do it with some brokers, so with Robinhood, you can't do that. You actually have to have cash sitting there. I work with Charles Schwab, and you can do the same with Fidelity. Is that you can, this is where you have to have a little bit of so I have my safety net for this in a high yield savings account because I don't want my money to be not doing anything. Okay. So I have it in a high yield savings account. So I'm allocating to these positions based on how much I know I have available that I can actually take out immediately. When I get the notification that my buy limit order went through, I then immediately bring the cash from my high yield savings account to my broker so that I don't have to pay on margin or commission fees or things like that. So I don't leave cash typically just in my brokerage account or maybe just a minimal amount. And as your portfolio grows, you can, take advantage of margin and stuff. It's a little bit riskier, but I just immediately bring cash back so that my money is not losing value inside, just sitting around for a buy limit order.
I do agree with you that looking at those numbers, it freaks people out. I mean, it freaks me out. Like that's why for me, it's really hard. My husband deals with the portfolio and our stocks. And I learned so much from you. I just want to buy. Every time I talk to you, I just want to buy.
We always buy during talk during market crashes too, which is great.
Sell, on sale, buy on sale. But it did freak me out. So, and for real estate, it's a little different because you don't have, even if the real estate goes down, because real estate also goes through cycles, right?
Mm-hmm.
And it can go up, it can go down, and you always want to buy right and sell at the highest price if you can. But it's different because for real estate, you have an asset that there with people that is living in my case, multifamily or single families, and it's not as easy to sell, right?
Yeah.
You could sell and lose money if you sell at the right price and the wrong price and time. But for the stock, it's just so easy to sell. You just click and then you lose 50% of your money and just click in 5 seconds.
So I'll tell you, I'll leave you with this and this is again a Warren Buffett thing. Never lose money. There are 2 rules of investing. Never lose money and never forget rule number 1.
Yeah.
So rule number 1 and so losing money is selling at there is no strategic benefit besides some tax strategies. There is no strategic benefit in selling at a loss. What do you gain by selling?
100%. Now, I have 2 questions about AI. Okay. Where in your system are you using AI and people is going to be able when they're learning your diamond system to use AI for understanding all these patterns? Is that how you do it?
Well, I'm using AI in everything right now because, as I said, triple compounding has to do with business too. And I know you're using AI as well because I saw your questions came from AI. Oh, look at that. So I'm recreating my entire course with AI and it's brilliant. We're creating all of these tools that make investing and picking the assets a lot easier. Every day we're just creating, so we're recoding all the things that I had to go to Seeking Alpha and I had to go to Morningstar. We just built all of the tools with Claude in 10 minutes. So everything is just there for us. And it has been insane. It's been giving us superpowers. And of course, we want to have some sort of oversight. But the question really is, what am I not using AI for? I'm using AI for everything.
That is an amazing question because this is exactly how everybody on my team is answering that question. When we are not using AI, and I saw that you have your AI agent. Okay, so I'm gonna ask my audience right now. Okay, because this is recorded because Kiana, I said that in the introduction. Kiana's birthday is during the challenge and she's gonna be traveling. Happy birthday, Kiana. If you have a question, please go on the chat or on the Q&A and ask a question right now. Okay? And what we're going to do is that we're going to send it to Kiana AI. Send it to Kiana AI.
Wait, no, we charge for that, but okay, I'll give you access.
And Kiana, you're going to you're going to reply with the answers. Don't give us access to Kiana AI because I know that's pricey.
I've trained my clone is insane. It's trained on all of my 8 books and like all of my courses. So yeah, we do charge for that. I will be in Australia, and you know what? I'm gonna give it to my assistant, and my assistant can ask Kiana AI and it'll answer it. Good?
Ask a question right now, you guys. That opportunity, if you are on the VIP, okay, again, you're gonna get those answers, okay, hopefully in 48 hours or before the challenge end from Kiana AI. So Kiana, let's talk about AI because something that some people is excited about all these AI stocks, right? There's an AI boom and everybody is chasing NVIDIA, Meta, and we know why you invest in Meta. Thank you so much for so what do you think that are, without saying, I don't know if you can say, or some of the AI stocks that you believe are going to be long term, okay? Or tell us about all these AI stocks that are out there and what do you think it's important for people to watch?
Yes. So let me ask you a question. So first of all, I've been buying NVIDIA since 2015, before it was even cool. Um, but let me ask you a question, because I know there's a lot of, oh, AI is a lot of like it's a bubble and it's gonna burst, and maybe it is bursting and people are scared about it. So for those of you who might be asking that, answer me this question. Do you think AI is going anywhere?
It's not going anywhere. It is going, yes, it is going somewhere. Stronger and stronger and stronger and bigger and bigger.
Yes. So here are so my portfolio is very, very AI heavy. And like the actual tools. So I have layers of software AI, I have layers of physical GPUs and memory chips and things like that. And each of these categories have a different personality. We talked about technical analysis and the cycles. So NVIDIA has a very beautiful personality. It goes up, it crashes 66% and goes back up again. This happens over and over again, and people just don't catch up, which is hilarious because we're like, oh my gosh, NVIDIA is going to crash. I'm like, of course it's going to crash, just like it did 2 years ago, and the year before that, and the year before that, and then it goes back up. So NVIDIA was just in the right place at the right time. I invested in it before AI was a thing, but it was a great um, option for us. My top allocations, I'm just going to give it to you, are actually like the boring quote unquote AI stocks like Microsoft, Google, Meta. I mean, of course, I invest in Meta because I'm a consumer, but also because it has some of the best AIs. I mean, the reason it gives me such a good ROI is because its AI it's the best. Literally, they had the godfather of AI working for them, something Yoon, I forget his name, but that he's the guy who actually built Meta's whole AI infrastructure, and it is brilliant.
And they just bought Manos.
They just got
AI.
Manus. So yeah, they just continue doubling down. And like Meta goes through cycles of like PR issues and like their metaverse going whatever. So, but Mark Zuckerberg's one thing he has is that he does have high risk appetite, which is something that I think is important for a CEO to have. And also I feel like he has like vision for that. So I have the usual boring AI stocks. I also layer them with some of the what do they call them? The shovels of AI. So one of the stocks that I've recently been looking at. So WDC, I'm looking at Core, COHR. This is an AI model that basically makes all of the AI models communicate with each other. As all of these AI models grow, they need to communicate with each other. So and I don't know how to pronounce actually his name, but they have something called optical networking that makes all of these AI models communicate with each other. So it's very huge as AI grows. Of course, I'm in memory chips. Now, memory chips with the personality, the psychology that we talked about are a lot more cyclical than any other category in AI within AI. So memory chips like MU, SK Hynix, Samsung, they go in cycles. They're kind of like oil actually. And so they just reached the highest high with the lack of demand in memory chips. So memory chips are what are required for AI to work. Just put it that way. And the memory chips pricing was going higher and higher and higher because there were not that many people producing them, not that many companies producing them. And OpenAI had locked up 40%. I'm getting very technical here, but I'm excited about these. OpenAI had locked up 40% of memory chip demand in 2025. That made memory chips just super expensive. But then they just backed out of that contract, and Google came out with something called TurboQuant. And most people are blaming like Micron and memory chips crashing because of that, but it had happened already. The cycle had already begun because memory chips were getting super expensive. Like people would just didn't want to buy it. Like nobody, no company was willing to pay. So because of that, the demand was actually decreasing. So that started the crash, and that always happens with memory chips category. So with memory chips, I like just sold actually. I just sold a whole bunch, and I'm going to go back in at lower prices. What else can we talk about? I mean, I can take a look at my portfolio, but I think I gave you a whole bunch of.
I have to say, everybody just take notes because this information is gold. Okay, like this information is golden. Now, Kiana, for someone like me that I don't know anything about stocks, or someone in my audience that they don't know anything about stocks, like if someone wants to do this, because we always have like a portfolio, right? And I have a husband that is doing that, and I think that my husband should be just join your course.
You should. We'll have a lot of fun.
You should be doing that and learning that. So for someone that would like to do this, like, is your system helping them to set on all these levels that you are? Because that for me would be like dream. Like I just
that's
learn
it.
those 5 things and just set up automatic.
And then let it go. And then go back to real estate.
Go and buy real estate. That's exactly, like, go and buy real estate, which is what I like to do, which is what I enjoy, what I do the best, and then just want to set up. So is that something that people will get?
That's what we have helped hundreds of thousands of people build up the system. We call it the triple compounding system, so that you can set it and forget it and then come back and smell the profits and eat the profits like a crock pot. So the biggest thing that you have to do is taking that 5 hours of setting the system up. 5 hours, there is just like 2 movies. Like watch a Titanic and, like, I don't know, Wicked 2, that's the 5 hours. Just take that 5 hours, set it up, and it's just going to be working for you. And as I said, I manage my own portfolio only 1 hour per quarter to set up all of these buy and sell limit orders.
That is
all of it. I don't change it because the markets are not that crazy. Like I know, like if you look at it day to day, it looks crazy, but it takes a while for it to reach the top and then go down. It takes typically 2 to 3 months. And that's when I go.
I have a question for you, Kiana, because I know that you manage your daughter's portfolio, and you know that you teach your daughter about this. Okay, so does she actually is learning your system and how she can make decisions? How old is she?
She's 7. She's 7. But she understands. Like I actually talked to her about it when I buy a stock for her. So when she was playing Roblox a lot back in the day. And then we found that, and then I explained to her how Roblox, you know, they have serious issues and they come and like they hijack, like I explained to her without explaining the dangers of playing Roblox. So we had Roblox stock, and then she decided she's not going to play Roblox anymore, and we sold her Roblox stock, and she completely understood why.
That's amazing. That's incredible. Yeah. She understood. So she saw that people was going to leave Roblox. What is the name?
Roblox is a game that it's very addictive, and then men come in apparently, and pedophiles come in. It's anyway. So without telling her, I told her a little bit. It's like the dangers, and she's like, okay, I'm not gonna play Roblox anymore. And then I explained to her that when I'm just right now, I'm teaching her how I select stocks for her. I'm teaching her because like stocks, it also has a lot to do with marketing. Like, okay, when you see a company that is trying to do that, that is marketing. And so we talk about everything that goes into making a company strong. Because again, entrepreneurs make the best stock investors because you can actually see the BS, you know? Yes.
I agree with you. I agree.
Yes.
I agree.
So I'm teaching her both entrepreneurship and stocks. And every time I'm like I manage her portfolio once per year because her portfolio is just a Roth IRA for kids. It's like it's maxed out at like $7,000 per year. So we just buy a whole bunch of things and then so I sit her on my lap and I just did it for this year and we were like, okay, we're gonna buy it. And then I don't know how much she understands, but she's excited. So
And for everybody here that have kids, we always want to give our kids that, that leap on learning the things that we can teach them that can help them in the future. And for us that we're in real estate, I teach my son a lot about real estate. I teach my 5 years old what a multifamily is, what mommy does, how we make money in our business, what it would do. But I also want him to understand stocks. So I gave him $500 and I said, I'm going to give him my 12 years old, by the way, I'm going to give you $500 for you to learn how to invest in cryptocurrency. Now, this boy came and said, Mom, I'm not going to spend the $500 because what's going to happen is that quantum computer is going to take over and crypto is going to disappear. And he's like going so much into this research.
that is awesome.
So he still hasn't spent the $500 that I gave him to buy cryptocurrency. But my question to you is, and for everybody here that has kids, I cannot give my son $500 to invest in real estate, right? We need a little bit more of money to buy a house or to flip or to buy a multifamily. But I can give him $500 to buy stocks. Okay. Do you have in your
Yes.
program
Yes.
a kids program or something?
Yes. I mean, everything is just so, first of all, like we make it so that fourth graders can understand. So my nephews, they went through my course when they were 12 and 11. And they fully understood it. My nephew started taking over my sister's portfolio because she goes crazy every time the markets drop. But my nephew is actually, they also like started talking about it. He did blow up a little bit, but then it is very easy to understand. Like now we're actually recreating the whole course with AI, and we're making it even like now we're turning it actually into a cartoon. So our course is actually a cartoon.
I love it. Okay, I love it. And
So it's going to be even better.
My son, my 12 years old, to definitely learn.
Oh, definitely you would understand. 12-year-old, definitely. Yeah.
Well, one more question. I know that my question is about mindset. Okay. If you have to leave our audience with just one mindset shift, okay, and one practical action that they would take from this AI challenge or from our conversation, what would that be?
Is that real estate is great, and all of the self-made billionaires with the B also have other investments. So it is fascinating because for me, going from stocks to real estate is also I'm like, oh my God, real estate is so hard. How do you guys do it? Do the bare minimum. And that is maybe today, if I could give you an action item, go open an account if you haven't already with something as silly as Robinhood. Fund it only $50. And this is what I want you not to do because Robinhood pushes you to day trading. Don't do that. Don't do that. Fund Robinhood. Don't listen to what Robinhood tells you to do because every time you trade on Robinhood, they make money. But they're very easy to use. So just open it with Robinhood, fund it $50, $100, $1,000, however you want, and pick one stock. One stock. That stock is a stock of a company that you already believe in as an entrepreneur. Or maybe you shop from all the time. That you're never going to go to their competitor. Or maybe it's a company that you really align with their values. Okay? Maybe it's a company that is helping your country. So, for example, I used to be very against war, but I'm Iranian. Now I'm like, oh my gosh, thank you so much, Lockheed Martin, for building all of those aircrafts to go and help my country. So, one stock, go to your credit card statement and see what is the one company that you shop the most from. That's going to be your first investment.
And they just leave it there?
Just buy it. And that's going to be the first step. Then get my risk management toolkit and then like
Oh,
see how much more you can do.
okay, we're going to give you guys the risk management tool, the free risk management tool that Kiana
That comes with a masterclass. I'm actually going to give the class on how to use it as well. So give you all.
So my team is going to drop right now the link, okay, for the free gift that Kiana has created for us. Kiana, like, let's close this with some AI, okay, and some AI mindset of how AI is like helping and changing your business. And what would you say to people right now that is thinking like, okay, this is cool, but this is actually going to help me to build my business?
Yeah. So, well, I mean, actually bringing it back to investing, like if you thought investing in stocks was hard, with AI, it's even easier now. Like, what's your excuse? And how is it going to help your business? It's going to be the safety net. So for when your business goes through cycles, those cycles are probably not going to be correlated to the market cycles. So you're going to have a wider allocation. Like Ray Dalio says, the best investment strategy is having at least 5 to 10 asymmetrical assets in your portfolio. Your business is an asset, real estate is an asset, add one more.
And I love what you said about AI is not going anywhere. Okay, so it totally makes sense. And that's what we have been teaching during the AI challenge is like AI is here to stay. I've been talking about AI for more than 3 years when nobody was talking about AI. They thought that this was just something like a bubble, okay? And it was just going to be something to talk about, and then nobody was going to use it, right? And now look at you, look at us as an entrepreneur. We breathe AI every day in our businesses because that's how our businesses are going to go 10x without us having to work 48 hours in a day, right?
Yes. And again, so just like anything, getting started with it could be a little bit challenging. So my invitation is like when people say, oh my gosh, I'm coding with Claude, they're not actually coding. Like it seems to you, it might sound like there's some geniuses doing something crazy.
You're just
Like
talking.
they're just, so every day, like try to add on a layer of AI component to something that you're doing. And you know what? This is my best tip, I think, of today. Ask AI how it can help you in your day-to-day. Like I ask Manus how it can help me. I call him he. I think they're he's. I ask Claude how it can help me. I ask each of them to give me ideas, and each of them have different working, like each of them are different for me. So I use Manus mainly for my social media ads management and as an assistant. Claude is amazing for writing and like coding. ChatGPT is amazing for brainstorming and creating images. Like each of them have their role. So every day, just add a layer of AI.
And this is what we has been teaching for these 4 days for the VIP, 3 days for the general admission. Code, like all the ChatGPT for us is like the minimum, right, that we use. But Manus, GenSpark, all these AI agents, how they can build their own AI agents. I know that Kiana, you have some of AI agents because before the code you said like, oh, I'm asking my agent to do this, and I have several agents, and I don't know you, but I have them named different, so I understand which one is doing each job, or like in my mind it's easier for me to call them by name. So thank you so much, Kiana, for this.
Love it.
This was amazing. So much packing of good information. We appreciate you, Kiana, and everybody here on the audience. You're going to click on the link that my team is putting in the chat so you can get the free gift for Kiana Danial. And Kiana, I'm going to have this a public invitation, public in front of everybody, okay, to invite you for another conversation, okay, for another conversation after the challenge. So for people that wants to learn more about what you do, just to have one full conversation with Kiana. So you're going to hear about us soon. Kiana, what do you think about that?
Oh, public invitation. Let's see. Let's see when I come back.
When you come back from all your traveling.
Yes, yes, yes.
Well,
We're
thank you
taking
so much,
off for a
Kiana.
month.
Happy birthday.
Thank you. Thank you so much.